What's going on, everybody? My name is Michael and welcome back to the Growth Mindset channel. In this video, we are in episode 2 of the real estate deep dive forums, where we go over questions that we think are not fully answered or could be thought of in a different way. Again, guys, in this breakdown of this video, I'll be going over questions that people have posted online. I'll be reading them and answering them to the best of my ability in terms of how I would answer each situation. Without further ado, let's begin. Hope you enjoy. So I recently got a HELOC on my personal home. I want to start BRRRR investing. I recently started working with a hard money lender, and I was told that I would need to have my business as an LLC to receive funding through them. So I used LegalZoom and got everything squared away with getting an LLC. Now I was wondering, since my HELOC is in my name, can I use that as a proof of assets and funding to help me with my purchase? I would not be using it to buy properties just with fees and proof of funds or emergencies, and to cover what the hard money lender would not. Thanks for your help. Okay, so what this person is asking is they're saying that they got a HELOC on their home, which is a home equity line of credit. Essentially, what this means is that if you have a paid down mortgage, from over the years, or even just having a large sum down payment, you can use that equity to take out as essentially a credit card balance to purchase other things. I recommend to use this if you're trying to expand in real estate or buy more properties. This individual here, what they're saying is they want to use that HELOC as basically proof of funds to use for a hard money lender. A hard money lender is someone that can offer you basically a large sum of money at a higher interest rate, but they can close pretty quick on a house and pay for a rehab if that is what you choose to use them for. This person is asking, can I use that HELOC to prove to the hard money lender that you have funds available? And to answer this is yes, you can use that. You can take the HELOC out and pay for the initial fee and down payment that the hard money lender is asking you to put in. Typically, that might be 10% or 20% of the deal, depending on how new you are and what your relationship is with the hard money lender. But that will be allowed in this exact situation. Something to keep in mind though too, if you do plan to use a strategy, remember that a HELOC does have an interest rate. So when you're doing your calculation, you need to keep in mind the higher interest rate from the hard money loan plus the HELOC interest rate that's tacked onto the deal. I'd recommend to run that in your spreadsheets just to make sure that the numbers work out okay, so that while you have your holding costs, you have every single fee associated into those mathematics. All right, second question. I'm looking to purchase a 3-unit building in Chicago and needs a total gut rehab, which is fine. My concern is the floor. The first and second floor have pretty bad sloping floors. The third floor does not as well, but not as bad. The building doesn't have a basement. That's okay, that's good. I've never dealt with this kind of situation before. I'd really appreciate any advice or who I should contact or what I should do to fix the sloping. Okay, so basically what I'm understanding from this property is that there's really 2 big things that come out from reading this comment here, and because there's no basement, either the house is really old, so it could just be settling into the soil, or it may perhaps the foundational issues. There might be foundational issues where perhaps the walls weren't structured good enough. So now you're seeing this sort of uneven leveling with the property. Okay, so what I would recommend is I would have actually if it is truly a concern where it looks pretty bad, I'd recommend having a structural engineer come by, take a look at it to see if it does justify to fix up the flooring and the grounds between the different levels, first floor, second floor, and then perhaps the third floor, just to make sure everything's structurally sound, and then go from there. I would recommend getting a couple quotes from other engineers just to make sure that you get your basis and have a good average. In addition to that, your engineer might give you recommendations on how much it would cost to fix it up. Build that into your cost of your spreadsheet. I would definitely not skip this step of making sure the foundation is right. Because if you rehab the entire property and you realize that the foundation should have been buffed up or reinforced before you spend all the money on making it look nice, now you may have to tear things apart again just to get back to the structural integrity of the house to fix it up. So that's my recommendation to you on this one. People who have little to no cash, or at least not enough capital to invest on your own, how did you find a partner to make it happen? what qualities did you show that set you apart, and what would you recommend a new investor to do to show their worth to someone with capital to invest? Okay, so I was in this situation as well when I was new, and I had some capital, but literally little to no experience. So what I did in this situation was I actually spent probably about 6 months going to just meetups in my local area. So I would go to these meetings. First off, I would just listen to how the flow of the meetings were. Is there an opportunity where you can actually meet other investors, or is it more of a presentation where someone's giving a talk and everyone's listening? So I think first thing you gotta do is find an environment where you can actually mingle with other investors to get to know who they are. Next thing I would do is make sure you're taking notes to show that you're trying to learn, you're willing to learn, and then build relationships with the people that are there. So obviously, someone's probably not going to want to partner with you if it's their first time meeting you. So you want to show repetition. You want to show consistency and that you're dedicated to real estate and you're willing to learn more and put the effort in to make things actually happen. So after you build this relationship with someone, I would bring up maybe the second or third time that you're looking for a partner, and you may have maybe limited amount of funds, but you have the hunger to help them out. And this can be useful in both ways, because what I would recommend you do in this situation is that perhaps they might just need help with something in their business. So you prove to them that you can help them, perhaps find a deal for them or connect them with another business partner. And that can bring value to the table, and perhaps that might boost your consideration of being a partner with you. What I did too on my first deal is that I brought money to the table, and obviously this is a little bit different, a little bit of cash, but that person had some experience. So after a time of just meeting up and kind of seeing eye to eye on what our goals were, we end up partnering. So in that situation, I provided money into the deal, and then they provided the knowledge to the deal. And maybe you can do the opposite, where you might not have a little bit of money, but you have a lot of time. So you gotta find that good balance and find the person that you're willing to work with to make that deal actually happen. So don't give up. I would say just keep going to meetups, show consistency, show honesty, and then show that you have the dedication to make a deal happen. That's my 2 cents for you. I would like to get everyone's thought on refinancing out of a hard money loan in today's market. I recently purchased a property in February, renovated it, and rented it out. And I am more than a little concerned in today's environment that hard money lenders will call their notes quicker than usual. I have a community bank willing to perform the refi with a lower interest bridge loan, but they aren't willing. They are really dragging their feet. Do you think that is anything to be concerned about, or is it better to wait for the normal seasoning period, 3 to 6 months? Also, I refied my previous property, which was a cash sale, after 3 months with a loan to cost. Are there banks that will do LTV in shorter seasoning period, 3 to 6 months? Wow, this guy's from Tucson, Arizona. Nice place there. Yes, so there are actually banks out there that will be willing to help you refinance with a shorter period of 3 to 6 months. My recommendation to you is just call, again, local banks in your area. I'd recommend asking other investors that are in a nearby location for you as well to give recommendations on who may be willing to do this. Obviously, with having a hard money lender, the interest rate is going to keep tacking up from that deal. So, you probably want to be pretty quick on your feet on finding a standard loan to go with, just to help keep everything locked and loaded with a fixed interest rate. Obviously, with this time right now, there are it's kind of rocky because you have the COVID situation. So there's a lot of lenders out there that aren't willing to give out more loans because they want to kind of figure out what it's like right now in terms of the market and have it settle more. So I would, you have some time. You haven't hit your 3 to 6 month period yet. Clearly, I would just keep looking out for other smaller banks that might be willing to work with you to help you refinance into a longer fixed loan. If they do try to call their loan quicker than 3 to 6 months, I would just verify in the contract that you signed with the lender that they're allowed to actually do that, just to make sure you have those facts straight in case that situation does happen. Good question. I'm brand new to real estate, welcome, and am extremely excited to get in and get my feet wet. From all the reading I've done on BP, as well as books and other blogs, it seems like the best way to start investing is by building yourself a strong network of lenders, realtors, investors, etc. Unfortunately, we're in the middle of a national lockdown and networking events have been placed on hold. I want to be poised to make a move when this inevitable economic dip happens. So I need to build my team now. Does anyone have any tips or ideas of the best way to build a network and brand for myself without actually meeting with people? Would love to see what you guys think. Thanks. Just because you can't meet with someone in real life doesn't mean you can't network. And in fact, I would recommend, if you haven't checked online already, there's probably most likely going to be a Facebook group for your city for investment deals. And if there's not one, this is a great opportunity to start one, be the leader of that group, and bring in investors. Something that I take part in as well is that I actually do weekly podcasts with other investors that go over their experiences and what they're doing in the market. Some of them have been accountants and attorneys and so forth. That's a whole separate podcast. And the thing too is so I'm also a part of this other Facebook group where we just talk about apartment deals, and with that Facebook fan page, what we do is that we also host meetings online. So I would recommend doing that as well if you haven't done it already or don't know of any. Is basically create a bi-weekly, weekly, monthly, whatever it is, online video stream where you can just literally invite people you would like to meet in person, but now you just meet them online and get to them that way. And it's been pretty successful, with having a Facebook fan page, that you're going to bring in investors that just like the page, and then they can participate when they're available. And this is a good way to network as well and just meet people while you are at home. So that's my recommendation for you. Is it a good practice to place each investment property under a separate LLC? I think it is a good idea for fix and flips, but I don't know how useful it is for buy and holds. Any advice is greatly appreciated. Okay, so the first thing I would ask the question is, what's the point of an LLC? Well, typically it's for asset management, asset protection. So with that in mind, your question, you're asking, should I have one LLC per property for buy and holds or not? Personally, I think it depends on your risk factor and your comfort. So if you have a lot of properties but they're low value, I would recommend having that under maybe one LLC or bridges below and each separate LLC. Something I'd also recommend is that I would actually put a value to each property and take a summation of that. So you might want to have an LLC, let's say it holds $300,000 worth of properties, and that's one LLC, and then you make another LLC. So you don't have to make an LLC for every single property if the values are extremely cheap, because then it's not worth managing all that paperwork for each deal. So yeah, again guys, it's asset management. So it's kind of your comfort level on how much properties you want LLC, just for protection. Hope that helps. Another thing too, just to keep in mind, is that if you're doing flips, I would have that as a separate LLC from a buy and hold LLC. If you haven't seen my video, I actually have one that goes over the different types of corporations. So you got your C Corp, you got your S Corp, and you got your LLCs, your partnerships, etc. Check out that video on this channel where I spent a couple of hours just reading and reviewing all the terms for each corporate structure. This might be helpful for you. If you're having flips, you might want to have an LLC. Let's say you're having a buy and hold strategy and you want to pay yourself over time, I would probably recommend an S Corp. So if you want to learn a little bit more about that, check out the video on this channel. All right guys, that's all I got for you. I hope you had a great time watching this video where we had a deep dive, episode number 2 on real estate forums. Go ahead and give me a thumbs up if you liked this video. Let us know in the comments below how we are doing, and I hope you have a great day. Take care.